tech companies putting in a lackluster showing this earnings season, but take a look at Amazon, LinkedIn, and Expedia this hour, all rallying nicely, although LinkedIn is only up about 7%, so it is off its highs. Facebook also the exception, of course, to what had been the weak start, but Silicon Valley isn't really focused on what Wall Street is watching. So what are venture capitalists thinking about tech these days? Cheryl Cheng is a partner at Blue Run Ventures. Cheryl, thank you for joining us, because maybe you can help us make sense of the environment. And, you know, we were earlier talking about a tech wreck in the last week or so. We know the prices of a lot of these private companies have come down, but yet there are still some pockets of real strength. So how would you describe things now?
Hi, it's great to be back on the show. So I think in Silicon Valley, it's such a diverse place, right? And I think a lot of the tech wreck, as you talked about earlier this week, was more focused on late-stage companies that we saw raise a lot of money in the last 12 to 18 months. At Blue Run, we're really focused on the early stage. So for us, the short-term implications of valuation that you might be seeing in the public markets or in late stage don't affect the opportunities that we see. We're really focused on new companies that are starting out building, you know, fresh ideas and looking at new technology opportunities. And in that area, we still think it's very healthy. This is sort of the best time to be exploring new opportunities.
But at the same time, what happens in the public market does have an effect on the overall environment in Silicon Valley, right? From commercial real estate to the valuations that entrepreneurs think they can demand, even at the somewhat early stages. So given what we are seeing this afternoon from Amazon and from LinkedIn, what we saw yesterday from Facebook, how do you expect that to affect the mood on the street out there?
So again, in the very short term, I don't think it's going to affect things at all. Unfortunately, I wish it would affect real estate faster than it will out here, because it's still very expensive. But in general, I think everybody is going back to a few key principles. And when they look at the large companies, they realize that at the very core, you absolutely need to innovate and also stick to business fundamentals. So in the short term, some of the companies that we see that are doing very interesting things and will kind of rise up above all of this noise are companies that have very strong unit and business economics as they build their companies and their technology. So for example, go ahead. So what I was going to say is, for example, when you look at companies like Coupa Software or companies that are going after, you know, cost management and spend management across all kinds of industries, and particularly in Coupa's case, going after small businesses, you see them deliver value through technology to the business's fundamentals for their customers. And as a result, they'll build a slow and steady revenue ramp that Wall Street, as well as their customers, will deeply understand.
Yeah.
So I'm just curious, given the kind of uncertain macro environment over the last year, let's just say, the ups and downs of the economy and whatnot, especially in technology, is it harder today to find value, or is it easier than it was 12 months ago?
What do you mean by value?
Well, if you look at various different companies and you see, you know, their metrics, do you see them as attractive investments for the long term?
Well, again, I think it depends on what you mean and what you think your investment horizon is going to be. For us, as a venture capitalist, especially in the early stage, our investment horizon is very long. So value for us is much more of a long-term game. So, for example, one of the largest VC-backed exits last year was a company called Ganji, which is a company in China, basically doing Craigslist for China. So did we find value in that company? It was one of the largest exits. As an early stage investor, most definitely, but a lot of that was a much longer time investment horizon. If you're thinking about the short term, where do we see value? I mean, definitely there's a much heavier scrutiny today on unit economics and business economics than there was, you know, 12 or 18 months ago, when there was much more exuberance about investing in private companies. So there is definitely more of a flight towards quality and focus on the business and how the business is developing than you saw probably 12 to 18 months ago, which is a healthy thing for all of us.
Oh, sure. I feel more relaxed already, Cheryl. Your voice, the scenery, the water there, the long-term discussion. Thank you so much for joining us. Great to get your perspective on what's happening here. Cheryl Cheng.